Hey there, it's Trisha with Easy Emini Trade, and I want to go over a couple ES trades that I took today using Divergence at resistance. And as I keep saying, you can use the principles of Divergence on any size or type chart you're trading or any instrument that you're trading. I'm going to be doing a workshop on Wednesday, July 18th. For anybody interested, I'm going to limit it to the first 20 people who sign up, and we'll do it at like 1 o'clock, and then we'll spend an hour, hour and a half on going over support and resistance and divergence. And I'd like to make it interactive, letting anybody who wants to ask any questions via their mic to do so. And so that's why I'm going to limit it to just 20. And then immediately following, we'll trade in the afternoon, and then I'll let those 20 people in my room for a week so that they can get a feel for the principles and how they can apply it to whatever they're trading. So let's get started on ES today. Okay, so this is the ES. I will trade this pre-market. Generally, I'll start whenever I'm finished doing my chores in the morning, feeding dogs, walking dogs, and so forth. So as soon as I'm able, I'll sit at my desk and then I'll watch for some info. And then decide if I want to take any trades. So this is the ES, and on the left-hand side is a 6-range chart. It doesn't really matter what you put it on, and on the right I've got it on a 3-range. That's what I'm comfortable with on the ES. And the good thing about ES is that when it's range-bound, you can buy support, sell resistance over and over and over again. So right here this morning, pre-market, you can see I've got a higher high on price right here compared to right here, and on the stochastic down here I have a lower high here compared to here. So that's divergence. So now we just need to be at resistance. If you're somebody who uses a market profile chart with the value areas and so forth, which is really powerful in of itself, just paying attention to those levels, right here is where the setup was occurring. So it's coming up to the high value area. So this is generally an area where we're expecting a reaction. So I'm okay to take this trade. So once it rolled over here on the stochastic, I got in at 93.50, and it took forever to work out. What realistically you would have been looking at this area right below at 91 and change, where the 50% is for a reaction, and then the 90 EMA, and then back down to support. This is the previous day's, this is yesterday's high and close. So whether you wrote it for the whole duration or not, you would short up here and then just watch the levels. If you are a market profile trader watching those areas, you would expect that once you shorted up in this area here, which right here, that coincides with this area on the entry chart over here. So you would expect a reaction again at this area here, back to fair value, then the VWAP area, and then back down to low value area. And generally, if price is going sideways without a real strong trend, it will generally go from fair value high to fair value low, fair value high, fair value low. I'm not going to go much into market profile right now, but I do have some webinars out there. If you want a copy, you can let me know. Otherwise, you can find it on YouTube. So you short, and then it works out pretty well. It takes a while, like I said. And I would definitely be cautious doing anything into news. So then nothing really happens down at support. It never really trades down there at the previous day's close or high. So nothing for me to consider there. I am usually pretty cautious buying those levels. I would like to see divergence. You don't have to wait for it. It's just a safer way to get in. But if you want to jump in without divergence, obviously you'll generally get a better entry, but that's going to be up to you. So then we open, and we're still watching this area based on this morning holding that fair value, high value area and fair value. So I'm just going to draw a line there so you can see where that is. So anything around that area, I'm looking for price to retest that vicinity or create a new area. So once we open, you can see that we've started generally a new area of resistance right here. I'm just going to put another line there. So that's at 93.50, and that's actually where I got in from the earlier trade. So I'm still watching this area. I'm not going to do anything right off the open. And then we trade back up there, and it tags again, right? But I still don't have any divergence. You could see that these still would have worked out if you shorted 93.50, but I want to see divergence. So I don't get that until right here. It attempts that 93.50 and it can't go higher, and there's my divergence. So I'm watching that area because it held here and it held here. Now it attempted to get through and failed. So now I have a higher high right here, then here, and my stochastic, looking at the green line, I have a lower high, so I can go ahead and enter in right in this area of 93 and a quarter or 93, and I would be looking down at the 50% area right here as my first target, and then I would be looking down here to the 200 EMA as the next target, and then if it can get through there, then I'm looking back down to support to see if we get a reaction there. So I don't get down exactly where I want to be to my support area, because I don't want to buy off this area because it's just kind of in the middle of, like, with the speak much with the capability of still trading down here. So I don't have divergence, so I'm not going to buy here. So I'm looking back up at resistance and see what happens. So we do get back up to resistance. I don't get any divergence, so I'm not really interested. Obviously, as I keep saying, if you want to be aggressive and just short the area, you can use a pretty tight stop, because if it fails to go lower here and goes higher than just above this area, you can just put your stop pretty close. So if you want to be really aggressive, you absolutely can. So now we get this attempt at this 94.50 area again from earlier pre-market. So this is the area that we were talking about for pre-market. I get divergence again as it's testing that area. Higher highs on price, lower highs on the stochastic. So I can short under this area. I'm going to look under this 93.50 to short, because it's been holding here as resistance. So I don't want to short above that in the event that it holds that again. So I'll look under that 93.50, and then I would look back down to the area of the 50% as support, as the first possible reaction area. So it hits that and then pops again. So now I'm going to tell you, I'm not really interested in doing any more divergence trades up there. Reason being is that it's holding this 50%, and so you can see here that we're getting higher lows here on these swings. So realistically, this could be attempting to change its bias. If you did want to short here, you could still see divergence. If you go from this peak right here and this peak here, we do have a higher high here than here, and then we would just have to move this. And this is still a lower high here on the stochastic than here. So like I said, you could short it, but keep in mind that these are giving us higher lows. So we have to at least be aware that we might not be able to tag this area of support here. So I'm no longer interested in it until, you know, it wants to trade through this area, and then I can look for this area right here, get through right here, and then I can look for a support area to be tested, and then see if I still want to do it. And that's that. So I hope you find that helpful. And if you have any questions, feel free to send me an email, and I will chat with you all later.